All right, so imagine you're like a fly on the wall in Warren Buffett's office, getting a sneak peek at his playbook. That's kind of what we're doing today. Berkshire Hathaway, they just dropped their Q4 2024 portfolio, and we are diving deep into, what it tells us about where one of the world's savviest investors thinks the market is going?
Yeah, and you know what's really cool about this is we're getting this info straight from Berkshire Hathaway's 13F filing. It's basically a snapshot of all their U.S. stock holdings, and they have to file this with the SEC every quarter.
So it's like a public treasure map, but instead of X marks the spot, it's Buffett's billions pointing to, companies that thinks are wins.
Exactly, and we're talking massive portfolio here. Over $267 billion. To really get into Buffett's head, we're going to focus on the top 10 holdings, the real heavy hitters.
Okay, so let's untrack this. At the top of the list, still holding the crown, Apple at a whopping 28.12% allocation. That's over $75 billion riding on the tech giant. I mean, some people might be thinking tech bubble, but not Buffett, apparently.
Right, but remember, Buffett's not your typical tech investor, chasing the next big thing. He's all about value. He sees Apple less as a gadget maker and more as a consumer company with an incredibly strong ecosystem. And that ecosystem, it generates cash like a fire hose.
Which is exactly what Buffett loves, right? I mean, he's famously said that he prefers businesses that are predictable, companies that he can understand. Apple definitely fits that bill. I mean, their products are practically ubiquitous.
Yeah, and they're constantly innovating, finding new ways to keep customers locked into that ecosystem. Think about it. I mean, how many people do you know who have completely bought into the Apple world? From their phones and laptops to their watches and headphones.
Yeah, it's true. Okay, next up in the silver medal position, American Express at 16.84%, almost $45 billion. This one feels like a classic Buffett pick. Solid, well-established company.
It is, but it also tells a story about where Buffett sees strength in the economy. American Express is tied to consumer spending, especially travel and leisure, which have been bouncing back nicely, post-pandemic. So this bet could be a sign that Buffett thinks that momentum will continue.
All right, now this is where things get really interesting. Bank of America, a longtime favorite of Buffett's, saw a 14.72% reduction. What's going on there? Is he losing faith in the banking sector?
Well, remember, the 13F is just a snapshot. We don't know exactly when he sold those shares. But this move, it definitely raises questions. Is he worried about rising interest rates? Does he see trouble on the horizon for the financial sector?
Or maybe he's just rebalancing, free up some cash for other opportunities. I mean, even the Oracle of Omaha has to make adjustments sometimes, right? It's not like he can just, call up the bank and say, hey, hold off on those interest rate hikes. I'm not ready yet.
Exactly. We can't know for sure, but that's what makes these filings so intriguing. They give us a glimpse into his thinking, but we have to kind of, put on our detective hats to figure out the full story.
Okay, let's keep digging. Coming in at number 4, we've got Coca-Cola at a steady 9.32% allocation. I mean, this one just screams Buffett, a global brand with a product that's basically, addiction-proof.
And it's a beautiful example of his buy and hold philosophy, right? He's been a fan of Coca-Cola for decades, and he clearly believes in the long-term power of their brand and its ability to generate consistent cash flow. No matter what the economy does, people are still going to crave that sugary fizz.
Yeah, it's like the investment equivalent of comfort food. Okay, moving on to the energy sector. Chevron is holding strong at 6.43% of the portfolio. That's a pretty big chunk of change for a company that's not exactly known for being cutting edge.
Right, but Buffett's not interested in flashy tech startups when it comes to energy. He's all about scale and reliability. Chevron's a behemoth in the oil and gas world with a massive global footprint and a proven track record of generated profits. Plus, with all the talk about energy security these days, oil and gas companies are looking more and more like strategic assets.
So it's like a bet on the old guard, at least for now. But here's where it gets even more interesting. Buffett actually ADD'd to his Occidental Petroleum holdings, bumping it up to 3.49% of the portfolio. So he's bullish on energy, but with a specific focus.
It seems that way. Occidental is very heavily focused on oil and gas production, especially in the Permian Basin, one of the most productive oil fields in the world. This move could be a sign that Buffett thinks the demand for traditional energy sources is going to stay strong for a while, despite the push for renewables.
So he's not afraid to go against the grain, even when it comes to the energy transition. All right, let's move on to a company that might not be as familiar to everyone. Moody's, they're sitting at 4.37% of the portfolio. What's the story there?
So Moody's is all about data. They're a credit rating agency, which means they analyze the financial health of companies and governments, and they assign them a credit rating. And that rating then influences the interest rates that those entities have to pay when they borrow money.
So it's a pretty powerful position to be in. You might not think about credit ratings in your daily life, but they impact everything from the interest rates you pay on your mortgage to the cost of funding for major infrastructure projects.
Exactly. And Buffett clearly sees value in Moody's stable fee-based business model. They're not as susceptible to economic ups and downs as some other companies because their services are always in demand.
Okay, next up we have Kraft Heinz, a long time holding for Buffett, even with its share of ups and downs, currently sitting at 3.74% of the portfolio. This one has been in the news lately, with some analysts questioning whether it's still a good investment.
It has, and this is where Buffett's patience and long-term perspective really shine. He's a value investor at heart, which means he's looking for companies that he believes are intrinsically worth more than their current stock price. He's betting that Kraft Heinz, with its iconic brands and global reach, has the potential to turn things around.
Since he's not afraid to hold on to a company, even when it's facing some challenges. He's willing to ride out the storm and wait for that long-term value to materialize. Kind of like how he probably feels about those boxes of Kraft mac and cheese in the back of his pantry. They'll come in handy someday.
Exactly. He's not swayed by short-term market noise or the opinions of the day. He's focused on the fundamentals and the long-term potential of the business. All right, let's move on to a company that provides a bit of stability to the portfolio. Chubb, the insurance giant, at 2.8%.
Ah, insurance. Not the most exciting sector, but definitely one that's always going to be in demand.
Right. People and businesses, they need insurance, regardless of what's happening to the economy. This makes Chubb a good defensive play, a way to balance out some of the riskier bets in the portfolio.
So it's like the bedrock of the portfolio, the solid foundation upon which everything else is built. All right, rounding out the top 10, we have DaVita Healthcare at 2.02%, another company that benefits from a consistent need, in this case, the need for healthcare.
Exactly. DaVita specializes in kidney dialysis, which is a vital service for people with end-stage renal disease. It's a niche market, but one with steady demand and a reliable revenue stream.
So this is another example of Buffett investing in a company that provides an essential service. He's got a knack for finding businesses that are almost recession-proof. So we've seen a lot of familiar faces, some strategic shifts, and a few surprises. What overall themes are emerging from these top 10 holdings?
Well, if we kind of step back and look at the big picture, we see a continued emphasis on companies with strong consumer brands, a willingness to bet on the long-term demand for energy, and a commitment to businesses that provide essential services. But, there's more to unpack here. Let's dive deeper into these themes and what they might tell us about where Buffett thinks the economy is heading.
Okay, I am ready to dive even deeper. Stay tuned, folks. We're just getting started. Okay, so we tell this picture of Buffett as like this master of balancing risk and reward. He's got his fingers in tech, energy, consumer staples. He's even got a healthcare play in there. It's like he's built a portfolio that can, weather any storm.
That's a great way to put it. He's not just chasing returns. He's thinking about preserving capital and building a fortress that can withstand, market shocks. And that brings us back to that kind of intriguing reduction in Bank of America. It might seem counterintuitive, especially in a rising interest rate environment where banks, traditionally benefit.
Right. So what's the signal there? Is he seeing something that the rest of us are missing?
Maybe. Remember, Buffett is a big believer in understanding a business inside and out. He's been known to pore over financial statements for hours, looking for any red flags. So perhaps he's spotted some risks in the banking sector that others haven't picked up on.
Or maybe he's just being cautious. I mean, the financial world can be pretty volatile, especially with all the talk of recession and inflation.
Exactly. And that's where his energy bets become even more interesting. While he trimmed his Bank of America stake, he doubled down on Occidental Petroleum, a company that's all about oil and gas production.
It's like he's hedging his bets, acknowledging that the world is still heavily reliant on fossil fuels, even with the push for renewables.
Right. It's a pragmatic move, recognizing that the transition to a cleaner energy future is going to take time, and that oil and gas will continue to play a crucial role in the global economy.
So it's not just about being green, it's about being smart, understanding the realities of the energy market.
Absolutely, and that's what makes Buffett such a fascinating investor to follow. He's not afraid to kind of go against the prevailing narratives, to make moves that might seem contrarian at first glance.
Okay, let's shift gears for a moment and talk about those steady Eddie holdings, the companies that provide essential goods and services like Coca-Cola, Kraft Heinz, and DaVita.
These are the cornerstones of his portfolio, the companies that generate consistent cash flow. Regardless of economic conditions, they provide a sense of stability and balance to the overall portfolio. Remember, Buffett's not just about making big bets. He's also about protecting his capital and ensuring long-term growth.
It's like he's building a financial pyramid with a solid base of essential businesses and a peak that's reaching for those high-growth opportunities.
That's a great analogy. And don't forget the role of insurance in this pyramid. Companies like Chubb provide a buffer against unexpected events, helping to mitigate risk. and ensure the stability of the overall structure.
So even in the face of uncertainty, he's got a plan. It's almost reassuring, knowing that even someone like Warren Buffett is thinking about how to protect his investments from the unexpected.
Right, and it highlights a key principle that all investors should keep in mind: diversification. By spreading your investments across different sectors and asset classes, you're reducing your exposure to any single risk.
So don't put all your eggs in one basket, even if that basket is made of Apple products and Coca-Cola bottles.
Exactly. But what's even more fascinating than the individual holdings themselves is what they tell us about Buffett's overall investment philosophy and his outlook on the future.
Okay, let's break that down. What's the Oracle of Omaha trying to tell us?
One thing that stands out is his unwavering belief in the power of strong brands. Think about Apple, American Express, Coca-Cola, Kraft Heinz. These are all iconic brands that have built up immense customer loyalty and brand recognition over decades.
So he's betting on the enduring power of brand recognition, the idea that people are willing to pay a premium for products they trust and feel good about.
Exactly, and that's a strategy that's likely to pay off in the long run, especially as the global marketplace becomes increasingly crowded and competitive.
But brands alone aren't enough. Buffett's also looking for companies with a solid track record of profitability and the ability to generate consistent cash flow.
Right, and that's where his focus on companies like Chevron, Occidental Petroleum, and Moody's comes into play. These are businesses that operate in essential industries with strong demand and predictable revenue streams.
So he's balancing the allure of high growth potential with the stability of tried and true cash cows.
Precisely. And it's a strategy that's served him well for decades.
Okay, so we've got strong brands, consistent cash flow. What else is he looking for?
Well, another theme that emerges from his portfolio is a focus on companies that are well-positioned to benefit from long-term trends. For example, his bet on Apple is clearly tied to the ongoing growth of the digital economy and the increasing importance of technology in our lives.
And his energy investments could be seen as a recognition of the world's continuing reliance on fossil fuels, at least for the foreseeable future.
Exactly. He's not just picking individual companies, he's identifying macro trends and then finding the companies that are best positioned to ride those waves.
So it's like he's playing a game of chess, anticipating his opponent's moves, and setting himself up for success years down the road.
That's a great way to think about it. He's not just reacting to the market, he's actively shaping his portfolio to align with his vision of the future.
But let's not forget that even Buffett can't predict the future with perfect accuracy. I mean, he's made his fair share of mistakes over the years, and there's no guarantee that his current bets will all pay off.
That's right, no one has a crystal ball, not even the Oracle of Omaha. But what sets him apart is his willingness to learn from his mistakes, to adapt his strategy, and to stay focused on the long game.
So it's not about being right all the time. It's about having a process, a philosophy, and the discipline to stick with it, even when things get tough.
Exactly, and that's a valuable lesson for any investor, regardless of their experience or the size of their portfolio.
Okay, so we've talked about his philosophy, his strategy, but what does all this tell us about where Buffett thinks the economy is heading? Is he optimistic, pessimistic?
That's the million-dollar question, isn't it? And there's no easy answer. His portfolio offers a mix of signals, some bullish, some cautious.
So he's not giving us a clear-cut prediction. He's playing it close to the vest as usual.
Right, but that doesn't mean we can't glean some insights from his moves. For example, his continued faith in Apple and his willingness to increase his stake in Occidental Petroleum suggest a certain level of optimism about the future of technology and energy.
But then we have that reduction in Bank of America, which could be interpreted as a sign of caution about the financial sector.
Exactly. It's like he's saying, I'm optimistic about the long-term growth potential of the global economy, but I'm also aware of the risks and uncertainties that lie ahead.
So he's not blindly charging into the future. He's approaching it with a healthy dose of pragmatism and a well-diversified portfolio.
Precisely. And that's a valuable lesson for all of us. The world is a complex and unpredictable place, and the best we can do is to prepare for a range of possibilities, to build a portfolio that can weather the storms and capitalize on the opportunities that lie ahead.
Okay, this has been incredibly insightful, but I'm still curious to hear your thoughts on one final question. If you could sit down with Warren Buffett and ask him one question about his investment strategy, what would it be?
That's a tough one. There's so many things I'd love to ask him. But if I had to choose just one, I think I'd ask him how he manages to stay so disciplined and patient in the face of market volatility.
That's a great question. He's famous for saying that his favorite holding period is forever. But how does he maintain that long-term perspective when the market is screaming at him to buy or sell?
Right. It's one thing to preach patience. It's another to actually practice it. When your portfolio is taking a hit, I'd love to hear his insights on how he stays grounded, how he avoids emotional decision-making, and how he maintains his conviction in his investment strategy, even when the world seems to be going crazy.
Okay, folks, we've just scratched the surface of what we can learn from Warren Buffett and his latest portfolio moves. But I think we uncovered some key insights about his investment philosophy, his strategy, and his outlook on the future. Stay tuned for the final part of our deep dive, where we'll explore the implication of these insights for your own investment journey. As we've been kind of going through Buffett's portfolio, one thing that keeps coming back to me is his famous quote, "Our favorite holding period is forever." It sounds so simple, yet it's incredibly difficult to actually do.
It is, especially in today's market. Everything feels so fast-paced, and there's this constant pressure to react to the latest headlines and trends.
Exactly. It's like everyone's calling to time the market, jump in and out of investments at just the right moment. But Buffett's approach, it's completely different. He's all about patience, discipline, and taking a long-term view.
And that's what makes him such a successful investor, right? He's not swayed by the emotional roller coaster of the market. He's focused on the fundamentals and the long-term value of the businesses he invests in.
So how do we, as mere mortals, learn to think like Buffett? How do we develop that forever mindset?
Well, I think it starts with understanding the difference between speculation and investing. Speculation is about trying to predict short-term market movements, to buy low and sell high, make a quick buck. Investing, on the other hand, is about buying a piece of a business and participating in its long-term growth.
So it's about shifting your focus from the ticker symbol to the underlying company, from the stock price to the business fundamentals.
Exactly. And that requires a certain amount of research and due diligence. You need to understand the company's products or services, its competitive landscape, its management team, its financial health.
It's about becoming a part owner of the business, not just a gambler placing bets on a roulette wheel.
Right, and that's where Buffett's focus on companies with strong brands and consistent cash flow comes into play. These are businesses that have a proven track record of success, a durable competitive advantage, and a sustainable business model.
So it's not just about finding a company you like or you believe in, it's about finding a company that has the fundamentals to support long-term growth and profitability.
Exactly, and that brings us back to the idea of patience. Building wealth through investing, it takes time. It's not a get-rich-quick scheme. It's about compounding returns over years, even decades.
And that requires the ability to kind of tune out the noise, to resist the temptation to react to every market fluctuation, and to stay focused on your long-term goals.
Exactly. It's about having the discipline to stick with your investment strategy, even when things get tough, even when everyone else seems to be panicking.
Okay, so we've got the fundamentals down, strong brands, consistent cash flow, patience, discipline. But there's one more piece of the puzzle that we haven't talked about yet. Diversification.
Right. Diversification is essential for managing risk. No matter how confident you are in a particular company or sector, there's always the possibility that something unexpected could happen.
Like a global pandemic, a war in Europe, a sudden shift in consumer preferences. You never know what's around the corner.
Exactly. And that's what it's important to spread your investments across different asset classes, industries, and geographic regions.
So don't put all your eggs in one basket, no matter how strong or reliable that basket may seem.
Precisely. And Buffett's portfolio is a great example of diversification in action. He's got exposure to tech, energy, consumer staples, financials, healthcare. He's even got insurance companies in there to hedge against unexpected events.
It's like he's built a financial fortress that can withstand any storm.
Exactly. And that's a great goal for any investor to strive for. Now, I know we've been talking a lot about Warren Buffett and his investment strategy, but I want to emphasize that you don't have to be a billionaire or a financial genius to apply these principles to your own portfolio.
Right. You don't need a team of analysts or access to insider information. You just need to do your research, think long term, and stay disciplined.
Exactly. And don't be afraid to learn from your mistakes. No one gets it right all the time. The key is to stay informed, adapt to changing conditions, and constantly refine your investment strategy.
Well, folks, we've reached the end of our deep dive into Warren Buffett's Q4 2024 portfolio. We've uncovered some fascinating insights about his investment philosophy, his strategy, and his outlook on the future.
And we've explored some key takeaways that you can apply to your own investment journey, regardless of your experience or the size of your portfolio.
Remember, investing is a marathon, not a sprint. It's about patience, discipline, and making informed decisions based on solid research and a long-term perspective.
And who knows, maybe one day we'll be analyzing your portfolio on the deep dive.
That's a goal worth striving for. Thanks for joining us on this journey into the world of high finance. We'll see you next time for another deep dive into the most interesting and insightful stories shaping the market.